What's going on, guys? Bexio back, and today we got a plug power video on the channel. We like to make some plug power videos, and this one kind of going over what's plug power could go to the lowest price that maybe could be possible, as well as how it's reacting right now is just exactly what we expected. But in a time of 75 basis point hikes from the Fed and massive oil prices and gas prices, maybe hydrogen can come out on top in a little bit longer term here and kind of relieve some of this pressure. It's a possibility. Maybe this alternative energy type stuff could actually come in, and hydrogen, if it could come in and shake up the market, then plug would be a massive winner in that scenario. But we can look at the plug power price chart, and it is literally doing exactly what we thought it was going to do. So when we saw around here, kind of rallied up and stayed around this point until market conditions got way worse when we got the higher than expected inflation CPI data, which then saw crashing the price down here. You can just see, I mean, gaps all left and right happening all the time, kind of down to this lower level where we hovered. Nice green day yesterday, back to red today, but still kind of hovering at the bottom here. So doing exactly what we thought it was going to do, and nothing really surprising out of here. So this dropped down from the massively bad news around to this level, and we haven't actually broke this line yet, 1367. So that's a good sign so far. Obviously, the market could get worse and worse. We're hoping the July 27th meeting for the Fed is actually a positive one, where inflation's curved down, and maybe they don't have to be so hawkish and raising rates. That would be ideal for the market to try and start to recover. That could mark the rally. If we have lower inflation, lower CPI data, and the Fed being less hawkish and not hiking rates another 75 basis points, if we get a 50 basis point hike, then that'd be a good sign. Maybe signs of the bottom of the market or the market bottoming. But for plug itself right now, this could be the bottom, maybe, but probably not if we go off of what could their total kind of assets be and what the stock price would be then. But if we look at some analysts here talking about plug, we can see them talking about the upcoming quarter for plug, saying that their most recent consensus estimate is calling for quarterly revenue of 186.91 million, up 50% from a year ago period. That would be massive to have almost $190 million quarter. That would be another all-time high quarter in revenue, which just shows continued growth of the company, which is good signs. Everybody wants to see that, and just kind of show they're moving in the right direction. So obviously they're having record quarters. It's a good sign. And we can see even more looking at the full year, their Zacks consensus estimate suggests analysts are expecting earnings of negative 67 cents per share and revenues of $925 million. These totals would mark changes of plus 16% in the earnings and then plus 84% in the revenue. So they would be losing less money and making a lot more money. So both of those good signs, what you want to see out of a growing company. And for them, if that's this year, 2022, if they're hitting almost the $1 billion, which just 2 years ago, their goal was 2024 to hit the $1 billion. So if they're doing that now, getting very, very close in 2022, that means next year, maybe we hit the $1 billion, and then 2024, we could hit those big signs like $1.5 billion that they've raised their estimates to, and seeing profitability take place there. And that would be the greatest moves we could see, which points us back to their balance sheet. One of the most important things looking at plug right now. So we can see, first of all, their last 4 quarters, all over $100 million. That's big. They're making more money. They're moving in the right direction. This was their record-breaking quarter, highest one yet, almost $162 million. Heavy losses on that one, but the record quarter nonetheless. This one again, the most recent one, 140 million. So not even that 20 million off their last quarter. They're just sustaining the record high quarters, doing very well. And if they have this projected one at 186 million, that'll be their record quarter yet again, just one quarter after their first record one again. So they're moving in the right direction. Love to see this happening. But the big part to point out is their cash on hand, cash equivalents, $448 million. The reason this is big is because even though the Fed is hiking rates, everything is getting more expensive to borrow. Plug actually can fund themselves, even though they're losing money. They can fund themselves to get to 2024 to start making money, and then they don't have to worry about obviously funding themselves. They'll be making money in a profitable company. That's the target right now. That's what everyone's looking forward to. And right now, 448 million. If they're losing 35 a quarter, this was 87. That was big. 31, 40. So if we just said losing 40 million a quarter, that would be 160 million a year. So they have more than enough money to cover the 2 years to get to 2024, get to profitability, cross that finish line, and actually start making money. And they can get there with just the cash on hand. But on top of that, with the rate hikes we're seeing, those are going to get rid of zombie companies. And a zombie company is obviously one that's extremely levered, has a lot more debt than assets. And you can see here, Plug's assets, $5.8 billion, and their total liabilities, $1.33 billion. So they have like over 5x what their liabilities are in assets. They're not severely over leveraged. They're not in crippling debt. Even their total debt's $500 million. They could almost pay it off with the cash they have on hand right now. It's just they're in a good spot for debt wise, growth wise, and what the company is trying to do. It's just the overall market right now is not in a good spot. And this is where you start to get the divergence in price and value, where you look at fundamentals of a company, extrapolate that out. I think Plug can get to 2024 relatively easily, not have to worry about, how they're going to get there with cash and everything. Become profitable. That's the big step. Becoming profitable by then is going to be something they have to do. If they're not, you have to reevaluate a lot from them. But I think they're going to be able to do it, get profitable, and then move forward, continue the growth. And with oil and gas and everything going on, hydrogen might get kickstarted into something where they can actually be suppliers and their infrastructure starts to work really hard and they start to make a lot of money. They are going to benefit the most out of a hydrogen economy. And if you want to look at a visual for their debt to assets right here, this is massive. The blue is their assets. The red is their liabilities. You can see just how much more massive they have in assets than liability. It's not even close. They're not a zombie company. They're doing good. They have way more than enough in assets to cover liabilities. They're growing in a good manner. They're actually doing everything just really good. They have growth in revenue, cash on hand. It's just they are sitting in a pretty good spot to get them to their 2024 target. And now for the part to predict how low maybe Plug can go in these market conditions that we're in, which are very, very treacherous. We can see Plug has 578 million about shares outstanding. And that is, we can figure out if the stock price goes down to how much money they have or how much their assets are, we can figure out what the stock price would be. So all we have to do, take their total assets, which is $5.8 billion, and then go over to their shares here, divide it by their 578 million shares and we would get just over $10 per share. So this would be what would kind of be the lowest, or maybe how low Plug could go, where it would be trading kind of just at base level of what the company has in assets. So no real huge multiples on them, because obviously you can't multiple off revenue or off profit because they're not profitable yet. So off of their total assets, this would be what the stock price could be, just over $10. Maybe that's where we go to if markets continue to get worse, continue to kind of crumble down. If we get to around $10, that would be Plug being worth what they have in assets, which would mean that they pretty much a little undervalued at that point. And looking at the chart, obviously we can see kind of this breakdown to the $10 mark. I mean, we're at 14 right now, breaking through 1367. Hopefully that holds up and we don't have to see all this kind of go through and the market doesn't get into this massively worse position. That would be best case scenario. But if we do get a little bit worse, we could see kind of the $10 mark being around where this stock could fall to, which obviously isn't ideal, not what people would want, but it would kind of be maybe even a little bit of a support where we could draw it down here, where it's kind of bouncing around here. This would be $10 right about here, which again could mark a second kind of channel here. So let's mark that down actually right now. So we'll do about right here and make it its own separate color, purple. Bang. So that is our worst case scenario line coming down. If plug actually goes down to this level, it will be worth only what it is in assets. And if it gets down there, severely undervalued. So will plug get down to $10 per share? Hopefully not. Hopefully never have to deal with that, but that is the target that it could go to, just based off kind of the total assets they have and pretty poor market conditions. But on top of that, we know oil, gas, those things are running very hot. Hydrogen could get kick-started in here, and if it does, plug is the massive beneficiary from that. That's gonna do it for this video, guys. As always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next video.